Several pharma companies get closer to a COVID-19 vaccine, the big banks see record revenue in Q2, and Twitter is the target of a massive hack. This is the Silver Reports Weekly Review, where we take a look at the headlines that move the markets during the week and all things investment related. It was a wild day of trading in the markets on Monday. The Dow closed up 10 points, the S&P 500 closed up down 29 points, and the Nasdaq closed down 226 points. Stocks started the day out up off news that Pfizer and BioNTech had received fast-track designation from the U.S. Food and Drug Administration for the development of their COVID-19 vaccine candidate. The news made investors bullish, even pushing Tesla up to over $1,700 a share for a part of the day. But the markets faded in the afternoon as California Governor Gavin Newsom ordered all counties across the state to close indoor operations for business, including restaurants, bars, movie theaters, and museums. Disney announced it would reclose its Hong Kong Disneyland due to a resurgence of the coronavirus in the city. The company reopened Disney World in Orlando, Florida, despite rising coronavirus cases in that state. Florida reported 15,000 new cases last Sunday and 12,000 cases on Monday. Pepsi kicked off the earnings season with an earnings beat. The company reported an EPS beat by 7 cents and a revenue beat by $480 million. The Frito-Lay's business in North America was up 7%, and the Quaker Foods business in North America was up 23%. On Tuesday, the Dow bounced back. The Dow closed up 556 points, the S&P 500 closed up 42 points, and the Nasdaq closed up 97 points. Markets were up on strong earnings reported by a few of the major banks, and news from Moderna helped close out the day strong. Moderna's COVID-19 vaccine was showing positive results in volunteers who received the drug in a Phase 1 trial. Phase 3 trials are expected to begin later this month. Phase 3 is the final stage before the drug goes to regulators for consideration. And for the banks, JP Morgan reported an EPS beat by 24 cents and a revenue beat by $2.7 billion. Revenue was up 14.7% year over year, and it was the company's highest quarterly revenue ever. Citigroup reported an EPS beat by 10 cents and a revenue beat by $710 million. Revenue increased 5.4% year over year, but the increased allowance for credit losses hurt net income. And Wells Fargo reported an EPS miss by 56 cents and a revenue miss by $460 million. Revenue fell 17% year over year, and the company slashed dividends to 10 cents from 51 cents. On Wednesday, the markets continued pushing upward, with the Dow closing up 227 points, the S&P closing up 29 points, and the Nasdaq closing up 61 points. Markets started off hot with the release of Goldman Sachs Q2 earnings. The investment bank reported an EPS beat by $2.25 and a revenue beat by $3.5 billion. Revenue was up 40% year over year, and the investment banking unit turned in a record quarterly revenue. Twitter's stock dropped after a number of accounts from several well-known people were hacked in a scam to obtain Bitcoin. The Twitter accounts of Elon Musk, Barack Obama, Joe Biden, Bill Gates, Uber, and Apple's corporate accounts, as well as crypto exchanges like Coinbase, Bitfinex, and Coindesk, were hit by the hack. And AstraZeneca rose on a report that the company plans to release good news regarding its COVID-19 vaccine. On Thursday, all three markets closed down on what appeared to be profit-taking from the last several days. The Dow closed down 135 points, the S&P 500 closed down 11 points, and the Nasdaq closed down 76 points. The weekly unemployment number came in at 1.3 million people filing for unemployment benefits last week. The unemployment number continues to decline slightly, but it's still way above the 200,000 claims that were filed in February. Earnings from Johnson & Johnson, Morgan Stanley, and Netflix helped to move the markets on Thursday. Johnson & Johnson reported an EPS beat by 16 cents and a revenue beat by $610 million. Although revenue was down 10% year over year, the company raised 2020 revenue guidance to $79.9 to $81.4 billion. Morgan Stanley reported an EPS beat by 91 cents and a revenue beat by $3 billion. Revenue was up 30.9% year over year, and the bank saw big increases in investment banking revenue as well as equity underwriting and fixed income underwriting. And Netflix reported an EPS miss by 22 cents but beat revenue estimates by $70 million. Revenue grew 25% year over year. The company added 10 million global streaming subscribers, but also guided for lower numbers in Q3, which caused the stock to drop. The company also named Ted Sarandos as the new co-CEO. On Friday, the markets closed mixed, with the Dow closing down 62 points, the S&P 500 closing up 9 points, and the Nasdaq closing up 29 points. The markets gave up early gains after the U.S. Consumer Sentiment Index fell to 73.2 in July from 78.1. Economists and analysts were expecting a 78.6 reading. The spike in coronavirus cases definitely weighed on consumer confidence during the month, And on Friday, the US reported a record 70,000 new coronavirus cases. In earnings news, BlackRock reported an EPS beat by 90 cents and a revenue beat by $100 million. Revenue increased 3.7% year over year, and assets under management increased 7% to $7.3 trillion. Overall, the Dow closed up 2% on the week, the S&P closed up 1.2% on the week, but the Nasdaq closed down 1% on the week as investors fled growth stocks for value stocks. In crypto news, the big story of the week was the Twitter hack. The reports state that the hackers cleared $120,000 in Bitcoin from the scam. As for the currencies, Bitcoin continued to trend down, hovering above the $9,000 line. The digital currency was down less than 1% during the week and closed our week out at $9,168. The price of Ethereum also fell during the week. Ethereum traded down 2.7% from last week and closed our week out at $233.47. Litecoin declined 2.4% on the week and ended our week at $43.27, and Ripple ended the week at 19 cents, unchanged from last week. Crude oil closed the week out at $40.58 per barrel, down slightly from last week's price. A big winner for the week was Benefytt Technologies, BFYT. The stock jumped 38% on news that it will be acquired by Madison Dearborn Partners. A big loser for the week was Tricida Incorporated, TCDA. The stock fell 36% after a regulatory update on its chronic kidney disease drug, Viverimare. That's a wrap for this week's market review. If you want to dig deeper into the headlines we covered, the links to the stories are in the description below, and a link to sign up to our weekend article in Focus is also in the description below. And if you're ready to get serious about investing and creating wealth for yourself and your family, check out our latest quarterly newsletter, The Civil Report. Serious investment ideas presented in a way that experienced and novice investors can understand. If you're ready to master the markets, check out our newsletter at civilreport.com. Thanks again for checking out the Civil Report's market review this week. This channel is dedicated to anyone who wants to start investing but doesn't know how or where to start. If you have any questions, ask in the comment section, like and subscribe, and may your next investment be your best investment. See you next week.